Welcome to the Daily Brief, where I'll go over the highlights in the market for Tuesday, October 18th, and then we'll go through the highlights to see how things look for Wednesday, October 19th. We had another up day. It's a little bit concerning that we opened right at the high and then we closed quite a bit below that, even though it was still an up day overall. We're seeing a lot of improvement, especially in the short term. We're kind of switching over to a more positive stance, but we need to see follow through buying. That's going to be the real key. We've had a couple of good up days now. Can it continue into a third day? Or if we do have a pullback, what's the strength of that pullback going to be? Is it going to get out of hand and see a lot of selling? Or is it just going to kind of wear off some of the more positive things that we're seeing right now? So let's go back and talk about what happened at the open. We gapped higher, almost up to R3, which I had to add to the chart there. So I usually just have R1 and R2. We didn't quite get to that level. That was at 37.71. Then prices retreated in an attempt to fill the gap. We came down and dropped below R2, which was at 37.20. Then we dropped down to R1. It's like, okay, here we go, which was at 36.99, or you could say 3,700. But they didn't get down to the unchanged level, which a lot of times when we're up, that will act as a support level. Well, I was watching for that, and we never got down to that level. As the day went on, we chopped back above R2, then we came back down to R1, and then we closed back up at R2. So it was a pretty roller coaster day overall, but we ended up being up 1.14% on above average volume. The technicals, they're looking a lot more positive, but we have to see some follow through buying. And if we do see some weakness, we want to look at the intensity of that weakness. Inflation, interest rates, that's still the going thing right now for the markets. Russia, Ukraine, that is still a really ugly situation. Things seem to be a little more under control in the UK right now. We have a lot of earnings that are starting to come out, and that can have a real impact on the markets as well. And then maybe some Fed speak that we may get. So, one thing that I did notice is in Tuesday's session, growth and the NASDAQ, as well as the NASDAQ 100, they underperformed. It was value that did better in Tuesday's session. In Monday's session, growth and the NASDAQ and NASDAQ 100, they outperformed. They really led us higher. Well, that didn't happen in Tuesday's session. That's also what happened last Thursday when we had the really big up day, only to have the really big down day on Friday. That's when value was leading things higher. So just be aware of that. I'm not predicting that we're going to go down necessarily. It's just a point of concern. When we opened, we were up as much as 2.3%, and we closed well off of that high. We had some earnings that came out from Goldman Sachs and Johnson & Johnson. They had better than expected earnings results, so that gave the market some support. The 10-year note settled right at about 4%. And then one thing that's interesting, the yield curve that we've been watching, the 10 to the 3-month, it finally went inverted. Not by very much, but it is inverted now, and we'll have to see. Is it going to stay inverted? Is it going to become more inverted than what it already is? Because this is going to put a lot of economists now into the camp that use the 10 to the 3-month as their recession gauge. They say, well, I'm not really going to say we're having a recession until the 10 to the 3-month goes inverted. Well, it now has done that. And that should be 30 to the 5. There's a typo there. Sentiment is more in the midpoint of fear. So we're not really extreme right now. We had total industrial production. It increased 0.4% on a month over month basis. That was greater than expected, where they thought it would be up 0.1%. And then capacity utilization, that's how much of these factories out there is actually being used. It increased to 80.3. They expected it to come in at 79.9. So this report was a little stronger than what was expected. The NAHB Housing Market Index, it came in at 38. They expected it to come in at 44, so that's weaker than expected. The last time we got this, we came out at 46. Our trend is negative, but it's weakening. With the 2 up days, the ADX is starting to roll over, but it's still not quite below the moving average. However, it is still above 20. Our bias is positive. We've had 2 up days in a row. I've switched our momentum back over to mixed. I'm still having a little trouble trusting this, especially since it was value that led us higher on Tuesday. But if we see some more follow through buying, we could switch that momentum over to positive. Here's just the update of the silly chart showing that every time the Phillies have won the World Series, that was really difficult economic times. And there's a typo here. It should be the NLCS, not the ALCS. But Philadelphia won the first game, so they're ahead of San Diego 1-0 currently. But that's not the World Series. They'll do the World Series after they get done with the championship series. So what's our outlook then for Wednesday? The technicals, they're turning more positive, but we've got to see follow through buying. We have the weekly MBA mortgage applications index that comes out and housing starts as well as building permits. We're going to be getting some more housing information this week. We've got the whole list of geopolitical events. The markets are still really fixated on inflation and interest rates, but keeping these other things in mind because the Russia-Ukraine situation, what if it explodes more than it already has? What if we get some Fed speak that can really influence the market? We have a lot of earnings that'll be coming out. That can also have a real impact on the markets. So our scenarios, I'm kind of in 2 places right now. Negative if you're longer term, because our technicals are still negative overall, but they're turning positive. So it's really hard to be convicted that we're going to go down from here. And we're turning more positive, at least in the short term, but it's hard to really get convicted to the upside of things if we don't see any follow through buying. We've been in this trap before. We don't want to get trapped again. And then we can't really go sideways because the ADX is still above 20, even though it is weakening right now. So our conclusion is the S&P, it's turning positive if buying continues. Short term, we are pretty much positive now, but we're looking better with the intermediate term. We're still negative with the long term. So thank you. Have a wonderful day. Please feel free to check out the full length video, and I will talk to you after Wednesday's session.